All right, I'm here with Subto Drew, one of my favorite guys in Subto, one of my favorite people in Houston. But man, let's talk about one of my favorite things that Subto Drew does is he's able to be a part of the community, but bring them in, whether it's working on deals with you or helping you find deals. But man, what's been the secret to success in being able to just get people in and help them?
Yeah, so a lot of it too, like when I was in a position getting started, I never had somebody to go walk a flip with, to learn how to do paperwork with. So I feel like it's my obligation to teach other people how they can do it. I'm not trying to be a mentor to people in the community. I'm trying to just be a friend. So, and the fact that I'm able to help them be a friend to them and help them with guidance and picking the right contractors and doing all this other stuff, they provide me with more lending opportunities because they have money for me. And they also allow me to get more deals too because they send me more deals.
Love it. And what's been one of the keys to like help, especially somebody who's just starting? Like, how have you been able to connect with them and really get them going? Because they might not know where to go.
Yeah, a lot of it is overcoming a lot of their mindset issues. That's why going on ride-alongs, going on meetups, seeing people like you that are actually performing at a high level, connecting with individuals like you to see, hey, it's actually possible. Casey's doing phenomenal work and it's really inspiring. But also more than anything, it's to say, hey, if Casey's doing it, why can't I do it as well too, right? But if you see people actually doing it, that's what makes it so much easier. So if I'm just getting started, I would connect with people like you. They're like, man, you're doing it at a high level. What do you need? You need more opportunities. You need more lending opportunities. So I would provide that for you if I'm just getting started.
Love it, man. And playing devil's advocate, some people might think, hey, I don't want to work with a bunch of people. It's going to be complicated, partnerships. Like, how have you leveraged it to where you work together and it's win-win for everybody?
Yeah, so it really just depends on what people need, right? I'm not going to say, hey, I need money from you and you don't want to loan me money, right? But if you say, hey, I want to loan you money and I just want a flat interest rate, then we can partner up together. But if it doesn't work mutually, I don't want to work with that partnership at all. So I'm really catering to what the individual wants. Very similar to sellers.
Yeah.
Right? The sellers really want, hey, I want a cash offer and I just want to walk away clean and free. Or other situations, hey, I want the most out of it and let's structure a seller financing deal. It's very similar with other lenders and other partners.
I love that so much. Yeah, you're just understanding, asking good questions, getting to know them, getting to know their gap or where they need help. Yeah. Man, it's super cool. So like, what big plans do you have to continue to do that? You got anything else in the pipeline, or what's 2025 look like?
Yeah, so I want to still do more creative deals, but I also want to do a lot more burrs, right? So I want to buy a house, rehab it, refinance it, rent it out. But some of those burrs, you can't get perfect burrs, right? You just have to raise money at the end of it. So what I want to do is I want to do a burr, pull out as much equity as I can, but then also raise money on top of that. So if I have to bring 10, 15, 20 grand to the table, I'll partner up with somebody that raises the capital. They get the capital. They become 30, 40, 50% partners, depending on how much they bring to the table. And I'm able to get a house that I'm a 70% owner on that I have to bring any of my own money. And there's equity. So I'm doing a hybrid model of a burr, but with adding a private money lender on top of it, private money partner on top of it.
Oh, love that, love that. Is the burr strategy one of the best out there, right? But as you mentioned, it's become difficult with prices and rates and everything. And if you leave money into the deal, who cares? Because you're still keeping the majority equity.
I'm keeping majority equity, but I'm also not bringing that money to the table as well.
Exactly. You're still you're executing the burr. I love it. Love it. So last one, easy one for you. Why do you love Houston's market so much, or why are you so bullish on Houston real estate?
I mean, Houston's one of the top 5, most populated state. It's 1 or 2 every year with investor activity. There's so much investor activity. There's so much potential here in Houston. There's a massive downside with Houston with taxes and insurance, which I don't really like, but I feel like I can pivot to it. I'm bullish on it because I'm here locally. I love the area. I love where I'm investing at, and I'm finding opportunities that I can either pivot with a burr or I can do an MTR strategy. So I really want to stay here for the next 1 or 2 years and then maybe start pivoting to other markets if I can get to that point. But I want to establish my foundation here in Houston.
Absolutely. I love what you said though, because a lot of that's why they're scared of Houston, right? It's taxes and insurance. But last question, how are you overcoming that? Is it just building equity or finding properties at a big enough discount, or is it the sub-2 stuff?
So yeah, it really just depends. So we're staying out of some markets that don't have the highest insurance policies, and we're also staying away from a lot of the higher tax markets as well too. So we're really being niched down to where we really want to be at. So we have a really good broker here that we just connected with. They're helping out with insurance companies that are like lowering our insurance premium by still keeping a lot of the coverage. So if you want that connection, we can give it to you as well. But also, more than anything, just trying to adjust with what's going on with the market, right? It's an election year and interest rates are dropping. I'm not sure if interest rates are going to stay dropped or if it's because the election's coming. So we're still trying to pivot and figure it out. Who knows? A year from now, I might pivot to another market. It just depends.
Yeah, but the beauty of being real estate investors, especially like us, when you go direct to seller, whether it's high interest rates or low interest rates, we can still make money. We're either buying at a discount or we're going, or it's like now we're flipping, we're moving deals.
I love it, bro.
Cool, man.
Can I ask you some questions?
Absolutely.
Dude, let's do it. Okay. All right. So I'm here with Casey. We're here at HostCon. Casey, what has been like your best connection here at HostCon?
Oh, best connection here at Houston. Man, it was cool. Was I connected with a couple people from Subto?
Yeah.
Actually, who I'd seen, but I haven't met in person, and I got to actually develop a deeper connection with them. Get to know what they're doing in their business. They were actually, little did I know, they're investing in Houston with some stuff out in Katy. So that was a cool one. And then the second one is a guy that's doing more pad splits, because there's more and more people doing pad split, and we've not formally done it in Wyoming, but we rent to college kids, and we effectively have one lease. And we'll have multiple people. I mean, effectively they're renting by the room, but it's one lease. But it's cool to talk to him about how they're applying it. Like, what are some of the rules? What should you look out for? And if you go that route, because ultimately I feel like that's another exit strategy for us.
I love hearing you talk and educate. It's really good, by the way. Good feedback. Okay, so Casey, what are you doing? Like, what does your portfolio look like today? And what are you doing? What are you doing right now? What projects are you working on?
Yeah, so yesterday, oh man, it's a funny story. So we were closing a deal yesterday. I was so bummed I missed you. But we closed a 23 unit yesterday, but I was like, and it all got blown up because my note, it was exciting, right? But I had this notary I had to sign yesterday at 1 o'clock. It was a mobile notary. It was a disaster, just way more complicated. But we got it done. This took like 3 hours to get it notarized. Closed it out. But anyway, exciting deal. Closed 23 units in Southwest Wyoming. It was going to be, again, I'm playing the negative, but it was going to be 39 units. I had another 16, but it was going to be a sub 2. But anyway, we actually knew the lender. It was a private money lender that was doing sub 2, so they wouldn't let us assume their loan. He blew up the deal. But anyway, we still took down 23 units.
Wow.
Made a $100K assignment fee. The cool thing is we're going to keep it, and we did it with a really cool partnership through Subto. Actually, I met them in Owners Club, got to know them. They're investing in the deal. They're getting depreciation. I'm adding more units to my portfolio. And actually, we're fitting that we're here at the SDR conference. We're actually going to take some of those units and make them SDRs, because there's 23, right? My thought is maybe 4 to 5 of the 23 will make into medium-term or short-term rentals, increase the revenue, and ultimately increase so that's going to help out the investor. It's going to help out us. Just so many benefits, right? And it's going to help us when we go to refi. Right? We're going to increase the NOI to where when I go refi, hopefully we can, because the goal is to actually refinance in 18 months, be able to pay the investor back and keep the asset.
So what did the deal look like? Can you break down the deal high level?
Yeah. So 23 units, we bought it for $2.35 million. We put $400K down. So most people that would scare them away, but I was getting that seller finance piece was at 4%. And where are you getting 4% nowadays, right? I mean, unless you're doing some of these crazy ones, we're getting 0%, but you're not getting that probably on a multifamily.
Yeah.
So 4%, and it's amortized over 40 years. So I got a really good, really low payment. And so we put the money down with our partner. He brought in the money to put the down payment.
He brought all the 400,000?
Yeah, he brought all the 400,000. Yeah, and we brought a little bit more for the assignment fee. But here's the key, right? The key part is it'll cash flow, and that's because I've got a really good interest rate. Wyoming taxes and insurance are low,
super low,
so it cash flows, and it's in a market that's growing. So I really believe, I ran a pro forma, in a base case, we'll be able to cash flow, right? But if it goes how I think it will with the growth, the rents are going to increase. We're going to be able to get that investor out, and then be able to hold it long term.
Wow, that's impressive. That's impressive. So, okay, last 3 questions here. So, what are you going to do more of this year or in the next calendar year? What are you going to do less of, and how can we help you in your business?
Oh man, more of raising money. So we launched my fund this year, and that's kind of been a big piece. So you'll like this. When you're doing direct to seller marketing, it's all about funnels. It's all about working the leads, right? And follow-ups. We're building out the exact same process for raising money, from a Google ad or a Facebook ad to moving them to a webinar to doing like an initial phone call, right? It's the same process of working a lead when you're working, somebody investing money as a seller, right? And I don't want to downplay that it's not it's a relationship, way more so. But we're working on building out that funnel to where, because ultimately, as you and me know, like when we talk to people who want to raise capital, once they get to know us and know what we're doing, it's easy, right? It's such a win-win, right? But the point of this marketing is now we're getting in front of more people. So we can ultimately, we want to help more people, right? Because when we get to talk to them, it's such a cool, unique win-win. So I'm excited with my fund to be able to do more marketing, raise more money. And then what I want to do more of is eventually start lending it out, right? Because I've always been at a point where I've always had more deal flow than money, right? But I'm hoping in the next 12 months, it's going to flip. So we've got more money and we're making all these great connections at conferences like this with people who need money. And we know how to underwrite, right? So if I know how to underwrite, I can protect my investors and make sure we're getting into more deals. I can take on more capital and ultimately keep getting that return.
Got it. So what are you going to do less of this year?
Ooh, okay. So do less of. I think I'm going to do less of being involved in my operations and really delegating to teammates, right? Like it's been a process to be able to like kind of give up the reins, right? And trust the people you hire to do their job, right? So I'm going to do less of that. We've been working on our bookkeeping and really getting that dialed in because I'm very involved in that and seeing how, so getting that delegated, I spend way too much time looking at that, right? So getting that delegated and then, just really letting my teammates do their thing so I can go raise money and help close deals and create bigger partnerships. That's the ultimate goal.
And then how can we help you with your business?
Oh, help me with my business. I would say, I mean, it's always making connections to finding, I would say two things. It's always raising more money, right? If you find different people who are looking to lend on deals, or even, what I found is people who are maybe lending money and doing really good job on short-term money. We partnered, the last deal I just did, the 23 units, that guy's actually a hard money, more of a like gator lender, whatever you want to call a short-term lender, and he making a ton of money doing it, but it's all taxable. So he came in as a long-term lender for me. He's going to get all the depreciation of his multifamily assets. So working with lenders that are doing really well or people that are just making good returns on whatever they're doing, right? It could be a small business owner that's crushing it and they need the tax write-offs. I would love to connect with those people to buy more multifamily. So we're going to get not only the long-term cash flow and the wealth, but they get the tax write-offs in year one.
I love it, bro. All right. Thank you, guys. We'll see you guys.